2022 has been a fascinating year, and in business, it's been even more so, especially with the economy and a downturn in the markets. And join us for the last time this year before we break for Christmas and return on January 19th to a bigger and even better, I know it's hard to believe, and even better informer is our markets editor, Mark Wenzel from the Hopkins Group. Good afternoon, Mark.
G'day, Michael. How are you today?
Good, thanks, mate. And I love the Christmas gear, and mine mainly, but yours is good. So
Mine's pretty lame. Mine's pretty lame compared to yours. All I've got is the reindeer glasses,
mate. And you know, I like a bloke who's not scared of something being dear in the market.
That's exactly right. Although I always try and buy low and sell high at the Hopkins Group.
Yeah, let's kick off with David Jones, right next to the Myers window.
Yes, absolutely. So department store David Jones was this week sold to private equity firm Anchorage Capital for $100 million. The seller was South African company Woolworths, which is no relation to the Australian Woolworths, but they paid $2 billion for the business only back in 2014. So clearly it hasn't been a great outcome for Woolworths, but could represent great buying for Anchorage. Private equity have done really well out of department stores and large-scale retailers in the past. Myer was once owned by a private equity firm when it split from Coles. They bought Myer for $1.4 billion and spent roughly $370 million fixing the business, and later sold it back to the equity market for $2.35 billion, a profit of around $600 million. The share price at the time of the float when Myer relisted was $4.10. The stock price is down to 67 cents currently, with after touching a low of 30 cents in July this year. Now, I remember the time that the float of Myer was being done by the private equity firm, and they had a massive marketing campaign around it with Jennifer Hawkins was the face of Myer, and much of that sort of $370 million they spent was on marketing, sales, but also to investors. And the reality of the situation is that department stores are really tough businesses and not great investments, or certainly haven't been in the past. And it'll be really interesting to see if Anchorage adopts a similar approach executed by Myer, which was to fix the financial metrics of the business using leverage and financial engineering by doing things such as running down inventory and making the balance sheet look stronger. And then using marketing to boost sales and promote the float to attract investors. At some stage, David Jones will be sold back to the market again in better times, perhaps in better economic times, and certainly better sales environment for David Jones. But just a message to investors is to be wary of buying off private equity and buying difficult businesses in the future. Retail has been a minefield for private equity businesses, and multiples of them have gone into administration with companies like Harris Scarfe, Tiger Lily, Toys R Us, TM Lewin, and Dick Smith's is probably the main one to be wary of, where they sold it to market, again, around strong marketing, and then, a few months later was sold into administration, basically straight after it relisted. So, and that was actually a private equity firm and a business that was managed by Anchorage. So certainly the message to investors is be wary of buying from private equity and be wary of buying department stores.
Gee, $2 billion down to $100 million reminds me of when Kerry Packer said you only get one Ellen Bond.
Yeah, that's correct.
Could well be.
Not a bad loss over 8 years, is it?
Yeah. Now, Beauty and Skincare Group, the BWX has revised down its forecast, not because I've cut back on my beauty regime.
Well, I'm sure you did around your election campaign. I'm sure you spent a fortune on the beauty, but certainly the company, which is part owned by Fortescue Metals billionaires Andrew and Nicola Forrest, is guiding to earnings of $20 to $35 million, down from $45 to $49 million they guided to in July when they did a massive capital raising. They cited weaker consumer sentiment and higher inventories as a reason for the downgrade. BWX has skincare brands, Sukin amongst others, and they also bought Zoe Foster Blake's go-to skincare brand in September 2021 for cash, and Zoe has a put option as well, which BWX is compelled to buy by 2024. They decreased the value of this stake from $89 million, which is about 50% of the value of the business. So Zoe Foster-Blake did very well out of it at the time, but they decreased the value of that stake from 89 million to 59 million as GoTo's results lagged expectations. This has been a horrible tale for shareholders, with the shares falling from $5 a year ago to 31 cents today. This is another cautionary tale, as we've talked about, recently, of extrapolating short-term earnings, with the boost from COVID into the future. During COVID, customers were spending on beauty care and other products, that they could use at home. Whereas now that the economy's reopened again, money's being spent on more discretionary and services type items, such as perhaps beauty treatments in shops, but also travel and obviously eating out.
Now, the Bank of Japan has surprised markets.
Yeah, the Bank of Japan surprised markets significantly during the week, with allowing interest rates or the allowable band of interest rates to increase from 0.25% to 0.5%. And so while it doesn't sound significant, it's the first indication to the markets that the decades-long policy of easing interest rates, which their interest rates are currently negative still, and they're the last one to make this adjustment, may be coming to an end. Japan's the third largest global economy, and it's had a significant impact on markets. The decision caused Asian markets to fall 2 to 3%, the yen rise versus the US dollar, and government bonds rally. With the yen at the lowest relative value since 1973, locals are repatriating money, so buying Japanese bonds and selling US dollars to take advantage of this fact. The impact on Australian investors has been that the US dollar fell against all other currencies, and is a sign that the US dollar might have peaked. The Bank of Japan is the last of the global central banks to move towards a raising cycle, with inflation in Japan reaching its highest level in 4 decades.
Wow. All right, Mark, and now I believe you've got a Christmas reading list for us.
Yeah, I just sort of thought, during this time with people perhaps having a little bit more time, I did some of my favourite books, a couple of investment books and a couple of others that I like. So I just sort of thought I'd raise it. Certainly Poor Charlie's Almanac, which is a book by Charlie Munger, who's Warren Buffett's partner. Has some really wholesome investment wisdom in there, and certainly from my point of view, worth reading. The other investment-related book is by Bridgewater founder Ray Dalio, which is called Principles, and I sort of found that was a really fascinating book about how to manage an investment firm, but also using some of those lessons to run all businesses, and certainly from a life perspective as well. Some really, again, wholesome reading in there. One book, and I'm an audio book listener, so I enjoy listening to audio books. So the book that sort of most impacted me, I guess, this year, the 3 books that most impacted me, which aren't investment related, were 101 Essays That Will Change the Way You Think by Brianna Wiest. Again, just really sort of thought-provoking things about life and things that go on in your life. And then Big Magic by Elizabeth Gilbert, who wrote Eat, Pray, Love, and that's sort of really about writing and how to write books and sort of the magic that goes on about writing books. And then The Art of Possibility by Rosamund and Ben Zander. Again, really fascinating listening from my point of view from an audio book, but I think great reading for people that want to have some recommendations over Christmas. But just wanted to wish everybody a really Merry Christmas and look forward to working with the Informer again in 2023.
Great. And then, of course, there was your 4th recommendation.
Of course, Michael.
Who knew? A book by, he's brilliant, this bloke. Who knew?
Right. From what's the title of it again? I can't remember.
Who knew? From Bouncing and Barbells to Ballet and Braids.
There you go. Michael Ray, is that the author?
Yeah, that's it. Fashion icon. And Mark, I just want to say I really appreciate your time and your input and insights on the Informer. And we look forward to coming back on January the 19th, bigger and better. Apparently, George has got improvements in mind. I don't know, possibly fireworks and dancing girls to open each segment. Who knows? But Mark, I hope you and yours and all the listeners have an absolute belter of a Christmas and a fantastic year ahead.
Really appreciate it, Michael, and same to you and all the watchers and the viewers at The Informer.
Thanks, Mark.